Hello and welcome to ATP Insights, where we cover the tech news that matters the most to Asia. Today is Monday, the 2nd of March, 2026. Let's get right to it. I want to cover three things today. Softbank is making OpenAI into a uniquely Asian story. Yeah, keep listening. This is a uniquely Asian story. And Softbank, we're going to follow on a little bit with some more news on Softbank as well. Softbank is building a massive U.S. gas power plant, and you'll see how this relates actually to topic number one. We want to welcome Yoke, Ling, Executive Director at KewMann, to the show to talk about artificial intelligence governance, AI governance. Let's talk about Softbank first. Softbank is making OpenAI into a uniquely Asian story. And I want to reframe this. I want to reframe what looks like a very American headline. Right? OpenAI feels like an American company, a uniquely American company. And OpenAI just pulled off a truly enormous private funding round. To be fair, the largest private funding round in history. But I want to turn this into what it really is: an Asian story hiding in plain sight. Just stick with me on this one. Because yes, the round features some US giants, right? But when SoftBank isn't a cameo here, it is a pillar of this investment round. And when SoftBank becomes a pillar of the AI platform layer, the question stops being who funded OpenAI and becomes who gets to shape the global AI stack technically, economically, and otherwise from this point forward. According to Reuters, OpenAI's new round totals $110 billion, valuing the company at about $840 billion post-money. Now, Amazon contributed $50 billion to this, and NVIDIA and SoftBank each contributed $30 billion each, and that's just not another venture round. That is sovereign scale, industrial size capital, the kind that normally builds railways, telecom networks, or national grids. You have to think about this like an industrialization investment. We're going to keep harping on this because we think it's actually really important to think about it this way and not just like another venture capital round. It's not like a Series A or a Series B or a Series C. This is a gigantic industrialization round at scale. This is nation state style investing. And that's kind of the core, right, of this whole argument, this whole case, is that AI, artificial intelligence, at scale is becoming infrastructure. And infrastructure always attracts a different kind of investor, a different class of investor, right? SoftBank has spent decades, literally decades, behaving less like a traditional financial sponsor and more like a strategic allocator and collaborator of technological destiny. Yeah, it sounds like a big thing to say, but we're going to go through some of this and you're going to see like this is exactly what this means. Sometimes they've been brilliant at this. And I feel like, a lot of times we talk about SoftBank, we talk about Masayoshi Son, and I don't feel like these two are separate. One of the things that makes SoftBank as an investor so unique is that it really is the personification of really this one guy and his vision about like what internet investing, what technology investing should look like. And it doesn't matter what stage the internet is in, SoftBank and Masayoshi Son are always investing in the same way. Like, how big can we get this investment to be? Sometimes it's brilliant. Sometimes it ends up being painful. Like, think about WeWork. A super painful investment, something that they literally had to write down to practically zero. But he made a big swing. And one of the reasons why SoftBank made such a big swing is because they really thought this was going to be part of the real estate infrastructure going forward. They were wrong. We thought they were wrong from the beginning. We looked at this and were like, this is going to be one of their losers. But they did that anyway. But they always invest with the same instinct. Find the layer that becomes unavoidable. This is what they thought about WeWork. They were wrong, right? But think about this. You may or may not know this about Yahoo, but they were one of the original investors one of the earliest, investors in Yahoo. $100 million. Turn that into like 24 or 30 billion dollars at the end, right? But one of the things they said was, how can we take this Yahoo investment and turn it into something bigger? They want to invest in the layer that becomes unavoidable. Again, no matter which part of the technology infrastructure sort of state we are in, they're looking for that thing that's going to change everything. And in this case, they think that's OpenAI. They want to be an investor in the stuff that's unavoidable, right? The stuff that is going to have the biggest impact, and they want to own a meaningful piece of it. So why does this matter specifically as an Asian story? I mean, besides the fact that SoftBank is an Asian company. Because for the last 20 years, Asia has often been framed as the region that adopts platforms, smartphones, social networks, cloud services, chip ecosystems, largely designed and financed elsewhere. I will make this case, though. NTT Docomo was before. This is before the iPhone, of course, right? But NTT Docomo was literally the first company in the world that said the internet is going to be a big thing on mobile. And while it was slightly more primitive, or frankly, way more primitive than when the iPhone came out, Docomo was do communications on the mobile network. That's where the internet really started doing mobile. So there is some precedent for Asia leading here. But let's just say that they have been following for a while, right? And this round, with participation from SoftBank, suggests a shift. Asian capital isn't just consuming the AI platform era. It's co-authoring it. They're really involved. And when we get to the next story that we're going to talk about, this gas power plant, you'll see how these two things are really connected. And the co-authoring doesn't only happen in boardrooms here. It shows up in the strings that are attached, right? Sometimes you say no strings attached. In this case, there are strings attached. And let's get back to the Yahoo investment that SoftBank made. God, in the early stages of the internet. If I had to guess off the top of my head, it was 25 or 26 years ago in 2000. But one of the things they said was, we're happy to give you this money, but one of the strings that's attached is we get to own the Yahoo brand in Japan. And frankly, for 2 decades, Yahoo and Rakuten essentially owned the sort of front door to the internet in Japan. In other words, they made an investment that they thought was going to be transformational, that was unavoidable, right? That they had to have. And it worked. It worked. If you look at a lot of Japanese people, they have an email address that says @yahoo.jp. Because that was the first email address that they had, except for their Docomo email address, to be fair. Okay, so it shows up, I was talking about this, it shows up in some of the strings that come attached to money at this scale. No one's going to give you $30 billion and just say, go ahead, do whatever you want. That's going to work for us. You'll see that there are, compute commitments, distribution rights, supply chain guarantees, and platform partnerships, again, similar to what SoftBank did when they invested in Yahoo in the early sort of nascent stages of the internet. Reuters is reporting Amazon's investment structure includes an initial $15 billion, with $35 billion, because they invested a total of 50, right, subject to conditions. These are the strings attached that we were talking about. And it also describes a significant compute linkage. OpenAI using 2 gigawatts of compute run on Amazon's Trainium chips, alongside an expanded relationship where AWS becomes the exclusive third-party cloud provider for OpenAI Frontier, framed as an enterprise platform for managing AI agents. You can see Amazon is also giving money, but saying, we're not going to give you this money for nothing. We want to recycle some of that money back into our Trainium chips, but also you're going to have to tell people that if people are using OpenAI Frontier, they're going to have to use their cloud services, or you're going to have to prefer them to use their cloud services on AWS. Strings attached. Now step back. Let's take a step back here and see if we can figure out what's happening. We've spent a lot of time thinking about this as sort of an industrial investment cycle, which means that you're going to invest a ton of money up front, but you're not really sure what's going to happen afterwards. You're not sure when the ROI is going to start to pay off. And the way this investment is structured, particularly from Amazon's perspective, is cloud providers want guaranteed demand for their compute fleets and their silicon roadmaps. That's the strings attached thing. Chip makers want locked-in customers and design wins that validate next-generation architectures. These big AI hyperscalers, these labs want effectively unlimited compute and capital to outrun rivals. The more money we invest, the bigger we build these data centers, the bigger we can be. And we're going to try to crowd everybody else out by saying, if we're raising $110 billion at an $840 billion valuation, to catch us, you're going to have to at least do the same. But to beat us, you're going to have to do more. There's a limited amount of capital out there in the world. And while there is a lot of money sloshing around out there, it just makes it harder and harder for other people to catch up. So what does SoftBank wants? So SoftBank wants exposure to the platform layer that could sit above all of it. This is classic SoftBank investment style. And this is why people argue about it on X and Hacker News. It looks like funding innovation, and it looks less like, funding innovation, and more like, I don't know, capital forcing vertical integration. Right? Think about that. If you want cloud, you want chips, you want data centers, you want all this stuff, and you want some kind of guarantee, or I would say an assurance You're going to get this stuff across the entire AI supply chain, chips, clouds, enterprise distribution, with OpenAI near the center. This is what SoftBank wants. And here's why this is a uniquely Asian story. SoftBank is not only writing checks. Let's go back into this again. It's exporting not just a playbook, but its playbook. It's been doing this for decades. Let's go over this again. SoftBank has historically tried to do something very specific: accelerate category dominance by concentrating capital into perceived winners. It thought Yahoo was going to be a winner. They put a ton of capital into it. They were right. They thought WeWork was going to be a winner. They put a ton of capital into it. They were wrong. They're not always wrong, but they're not always right. They're not always wrong, but their strategy is always the same. And then they want to construct massive ecosystems around these investments. In other words, it doesn't merely bet on the future. It kind of tries to pull the future forward. They're saying, this is where we think things are going to go. Let's pull things in that direction. And one of the ways they do that is just by dumping a ton of capital into those places where they think that this is going to really matter. And we know this is not SoftBank's first major step into OpenAI. Reuters previously reported that SoftBank completed a very large investment and translated roughly an 11% stake at the time. And more recently, has tracked SoftBank's increasing exposure as investors treat it as a kind of public proxy for OpenAI. SoftBank is very, very invested in this. So if you're sitting in Asia, right, whether you're a government, a sovereign wealth fund, a founder, or even a CIO or a CISO, this round signals something really, really important. And this is good too, right? Because we don't want single points of failure, but we also don't want single points of influence. The AI platform layer, here's what this is signaling, at least in pieces, yeah? The AI platform layer may not be solely shaped by US hyperscalers and US policy. Again, this is not a political statement at all, but you do kind of want a well-rounded view on what artificial intelligence is going to become, and not just have a single point of influence. Often we talk about a single point of failure. If this thing dies, well, then everything goes away with it. If it fails, everything fails with it. But if you want more than one point of influence, then you're going to have many countries, many people, many entities involved. And I think that's what this is signaling. It may be shaped by a capital coalition, this investment into OpenAI and artificial intelligence in general, that includes Asia's most aggressive tech financier, and that is SoftBank for sure. There are companies with as much money as SoftBank. Let's be clear about that. Some of the sovereign wealth funds in Asia are gigantic. The ones in the Middle East are gigantic. But they don't have the same sort of track record that SoftBank has. And they definitely don't have the same playbook. And at some level, they don't have the same risk appetite as Masayoshi Son. And that's why I said it's hard to separate Son-san from SoftBank. Because it's his influence on the investment strategy of SoftBank itself that allows it to take this bigger risk. They're happy to fail. Remember, he's not doing this. And I repeat this all the time when I talk about Masayoshi Son. He's not doing this just to make money. He wants to make money. He's made a ton of money over time. He's definitely made more money than he's lost for sure. And I believe that he always will. But it's the risk and the influence and sort of the legacy of, I created these platforms. I was there when it was first starting. I was there at its nascence. And I helped create this. And this is one of the things that makes it a uniquely Asian story. And by doing so, it creates second-order effects that are easy to miss if you're not really paying close attention. Asia's leverage increases. Its dependencies do as well. But when Asian capital becomes structurally embedded in the leading AI platform, and frankly, that's what OpenAI is, Asia gains influence. I mean, this is one of the things that SoftBank wants to do. But it also increases dependence on the platform's governance decisions, export control, like all the things that are related to it, which most of them are going to go through some US choke points. But still, SoftBank wants to be at the table. They want a seat at the table. They want to be able to have some kind of influence about what's going on here. And this idea of, hey, it's my money, kind of gives them a little bit of leverage, right? And this also pressures AI strategies across Asia. Because if OpenAI becomes an even more dominant platform, financially, commercially, and otherwise, then every sort of AI strategy, whether it's a national strategy, a company strategy, a regional strategy in Asia, has to answer a much harder question. Do we build our own models? Do we partner with OpenAI? Or do we hedge across multiple stacks? Right, and these questions are unanswered, but it really forces people to sit down and think about it, right? And it also changes the game for Asian startups as well. If OpenAI's platform footprint expands and if the agent platforms become the new distribution layer, then Asian startups literally have to ask themselves, are we building on top of the platform or are we building adjacent to it where differentiation may or may not survive? Right? This is a gigantic question. So just think about this. Are we building on top of the platform or are we building adjacent to it? It's a really important and big question. And again, I don't think this round is going to answer that either. But that's the real founder implication. As the platform layer consolidates, differentiation, we say this all the time, right? It shifts to proprietary data, workflow ownership, distribution, and market execution. I mean, anybody can do clever prompting. Look all over LinkedIn. Everybody and their brother wants to tell you like the most clever prompt that they've come up with, and they want to share it with you for free. I don't know why they would charge you for that prompting. That's not going to be the issue here. But it also might be a preview of how the next decade gets financed and how it's going to rhyme with previous decades. I like to say this all the time, right? Look, and I'll use this sort of trite phrase. History doesn't repeat itself, but it definitely does rhyme. Again, go as far back as the invention of electricity, railroads, highways, all this kind of stuff. They weren't exactly the same, but boy, they did rhyme a lot. And the biggest story here might be that this isn't just about OpenAI. It's about the financing model of frontier AI, but also frontier technology. Mega rounds that look like infrastructure funding, aligned with long-dated computing contracts and strategic distribution agreements. Okay, you have to think about this. Let's go back to this strings attached thing that we were talking about before. Right? They're not just giving $30 billion, and it's not just Softbank that attaches strings to it as well. And you can see there's going to be a push and pull here, right? NVIDIA invested, that's the chip maker. Amazon through AWS also invested, that's the cloud stuff we were talking about, but also some chips involved there. They want them to use the Trainium chips. And Softbank. NVIDIA is kind of this global company, and you can make the case that Amazon is too, but it's really a uniquely American company at scale. It really is. And Softbank, not a complete outlier, but definitely an Asian company with a gigantic Asian footprint across all of its businesses, not just its investment businesses, right? If you just think about it. And there's going to be a push and pull, I think, between what does Amazon want, what do they want with their chips, what does NVIDIA want, what are they willing to give up or give in on, right? Because remember, we spent some time on some of our other shows talking about how NVIDIA wants to build this full stack artificial intelligence service provider as well. SoftBank is going to be super involved. And Masayoshi Son is not a shrinking violet. So the implications of this, I think, are large. The reason this is an Asian story is not simply SoftBank invested some money in a company. That would be way too easy. It's that Asia is asserting itself in the most consequential layer of the modern economy, the general purpose platform layer for cognition and automation. In the internet era, right, platform power is built on attention and ads. Right? I mean, Google, Facebook, the biggest players, the biggest winners in the internet era were those companies that built these massive platforms and took a ton of ad revenue. Okay, this is a different thing. In the AI era, which again, early innings, we're just at the beginning of this thing. We're going to have to look back on this 10 years, 15 years from now and figure out actually where we actually went. But we have an idea. We think we know where we're going. But in the AI era, platform power is built on compute, capital, and distribution. And when SoftBank helps bankroll the platform, Asia's not just along for the ride. Asia's clearly trying to push things forward, and they want that proverbial seat at the table so they can help drive what the future of this is going to look like. Again, they look at technologies and they say, is this technology going to be inevitable? And if they believe it is, they want to invest as much money as possible, and they want to have as much influence as possible as well. Okay. We said we're going to keep talking about SoftBank, but I want to switch gears a little bit and say, A bit more power for SoftBank. If the OpenAI mega round is the Asia story hiding in plain sight, then this next SoftBank move makes the subtext explicit to me. SoftBank is not just financing the AI platform layer. It's moving downstream as well, into the physical bottleneck that decides who can scale AI at all. Power, electricity, right? Because if you don't have the necessary power, right, for your AI data centers to function properly and at the right cost, not only going to use tons of margin, but you may not even be able to run them at all. TechCrunch, among other outlets, is reporting that SoftBank subsidiary SB Energy is expected to build a 9.2 gigawatt natural gas power plant on the Ohio-Kentucky border with a price tag of $33 billion. The money in some cases doesn't even, it's a big number. But it's potentially the largest power plant in the United States, capable of powering around 7.5 million homes. Now put that next to the OpenAI mega round story. What does OpenAI need? I mean, among other things. In the funding round, the strings attached that we discussed weren't subtle. Compute commitments, chip roadmaps, cloud exclusivity, long-dated infrastructure alignment. And Reuters framed this raise not just as money, but capacity. Right, you have to, again, think about this from an infrastructure standpoint. This is industrial scale, nation state scale investing. You can't think about this as like a venture capital investment. This is a completely different category. And they also wanted to include here in the strings attached thing that we were talking about, including large scale compute agreements to these hyperscales. If we build this thing, well, first of all, we're going to have to power it. But second of all, we're going to have to get all this usage so that we can make enough money to kind of cover the costs here and to actually turn a profit. But the power plant story, and the reason why I wanted to talk about this, tells you what comes after that. When compute becomes the scarcest input, capital starts chasing energy as aggressively as it chases model capability. Okay? What does that mean? It means, again, if I'm going to continue to build gigantic data centers, whether they're in Kentucky and Ohio, or in Arkansas, or in California, or in Massachusetts, or frankly, anywhere else in the world, the one thing that they're all going to need is power. And if power and water and cooling and all these things become resource necessary, well, then building this power plant, this gas-fired power plant, is going to become really important. And here's kind of the deeper framing here. SoftBank is trying to own a chunk of the AI throughput equation. And I would just say they're trying to own the entire value chain here, right? Because they want to ensure that if they're investing in OpenAI, that OpenAI actually has enough power in places where they're running their massive AI data centers so that they can actually do the computations that they want to do. Because you can have all the chips in the world, you can have all the servers in the world, but literally if you can't turn the lights on or run them as fast as you can, and it's not just turning the lights on either. It's what does it cost us to turn the lights on? Who do we owe the money to if we want to turn the lights on and run these massive servers and massive calculations, right? And run these gigantic models and do all the research that we need to do. Who do we owe? But if we own the data centers, if we own the calculations, if we own the compute, we should probably go down a little bit as well and own the power. Because if we don't, that power is going to end up being way too expensive, not just for us. This is what they're thinking, but for people in the surrounding towns. And then you're worried about backlash. Right now, you're really worried about power allocation and power costs. Yeah, this is going to be a big problem. And that's one of the reasons why they're doing this. And not only the equity in the model company is what's important to SoftBank, and not only the ecosystem around it, but also the energy that turns the data centers into usable intelligence at industrial scale. This is the point that we're just making, right? Is that if you don't have the power output to be able to run the data center output, well, then what's the point of any of this? So TechCrunch explicitly connects the dots. SoftBank is a partner in the Stargate project with OpenAI. And SB Energy didn't clarify whether this plant would feed the broader grid or directly serve the data centers, but boy, Either way, the logic is the same. AI infrastructure is converging with national infrastructure, industrial infrastructure at scale. And the actors who can finance both start to look like the real platform owners. This is the real point, right? And that is, you don't want to have to rely on somebody else's industrial policy, no matter which country in which you're operating. And again, this is not a political thing, right? You just want to be able to turn on your own lights. And whether you send any excess energy back to the grid or not is frankly up to you. But my presumption here is that they'll let the existing utilities provide power to everybody else in whatever neighborhood in which they're operating these gigantic data centers. But they want to 100% ensure that this 9.2, what did I say, gigawatt gas-fired power plant, I'm pretty sure is just for them. I don't know that for sure. But we can watch the way this plays out. And notice what this does to the Asian story angle. In the first story that we talked about, Asia's role was capital and governance influence, just co-authoring the platform layer, where we want to make sure that we understood exactly how this was all working. We wanted to make sure that we owned the compute. We wanted to make sure that in the strings attached part, we understood where the data centers were going to be. We understood the chips we were going to use. We understood what we owed to our partners who are also building full stack artificial intelligence businesses, right? And the cloud stuff. This is where Amazon investment came with its own strings attached and said, sure, we'll make this investment. But the flip side of this is you have to run some of your stuff, or all of it, to be fair, on AWS. Yeah, otherwise we're probably not going to give you all this money. But in this story, Asia's role becomes way more physically tangible. Because Asian capital is now helping to build American energy capacity to power this AI boom. Think about it. This energy is going to take a couple of years to build, but comes at a massive cost. A massive cost. $33 billion is what is being estimated. That's not adoption. That's enablement, and upstream enablement. It also reveals a hard constraint most artificial intelligence debates conveniently ignore. Right? Scaling AI is not only a model problem, it's a grid problem, it's an energy problem. We do talk about this all the time. If you follow us on the Asia Tech podcast, but also if you follow us on a global tech podcast as well, go to our YouTube channel, subscribe, like all the videos that are there. You'll see that we talk about this all the time. It's a grid problem. It's an energy problem. It's not just a compute problem. Because to get that level of compute, you have to have enough energy to run it. And frankly, even just to build the chips, you have to have enough energy to run that as well. TechCrunch notes, and it's not just TechCrunch, but other outlets are noting this as well. A project this size that Softbank is funding now could take up to a decade to build and may actually run into other shortages. Because to create power, you need a whole bunch of other components. But if nobody was planning on, if none of the suppliers of this, of the parts and mechanisms, particularly like turbines, let's say, well, then that's going to have to get built too. There's a massive economic, like we talk about second order, third order impact of some of these investments. So that's going to have to happen as well. And SoftBank is essentially saying, if the bottleneck is going to be energy and time to power, we're not waiting. This is actually super interesting, right? Because they're looking around and saying, yeah, we want to be one of the biggest investors with the most impact in OpenAI. But what's going to stop OpenAI from having its largest impact? And SoftBank clearly looked around and said, there's not enough power to run all this stuff. Maybe there is today. But again, if you're in an arms race with some of the other AI labs, some of the other frontier AI labs, well, you're going to be competing with them not just for chips, but you're going to be competing with them for power as well. Let's build our own, right? They don't want to wait for the system to do it for them. They want to build their way through it. Again, to be fair, like, let's build our own highways. Imagine it. I mean, isn't this what the railroads did? They were like, we're not going to wait until the country makes an investment in the railroad. We're going to do this. We know the ROI is not going to come back right away. But if we can connect arteries all across the country, we're essentially going to be one of the most important parts of the national, but also the local economy. And SoftBank is thinking the exact same thing. And that adds a final layer of meaning to the OpenAI mega round. This mega round wasn't merely huge. It was a signal that frontier AI is entering the era where the winners are determined by finance, chips, cloud, energy, permitting, construction, just a complete infrastructure stack. And I'll be honest with you, Softbank is really good at building this. We talked about this in our previous segment. They want to invest in the technology that they believe is inevitable, that it's inevitably going to have impact on the economy at scale. But once they do that, they look around and say, what are the other pieces that we need here? Right? So if you go back and look at the Yahoo thing that SoftBank did in Japan, one of the other things they invested in was the mobile phone business. SoftBank was actually the first mobile phone company in Japan to have the iPhone. Why would they do that? Well, because they figured out after they saw that Docomo made this attempt to get kind of, I wouldn't call it the baby internet, but sort of the initial cut at what the internet was going to look like on mobile. And they figured out that the next generation of people that were using the internet were going to do it mostly on mobile. So they invested in a mobile phone company. And they invested in all the things that were necessary to build that mobile phone company so that they could have the first iPhone. Okay? They're doing the same thing here. They believe that artificial intelligence is this inevitable part of the economy going forward, that it's going to be infrastructure going forward in a way that nothing else in the history of mankind has been except maybe electricity. And they want to make sure that they're having as much impact on this investment, as much say with their seat at the table. But they did the same thing. They looked around and said, what else is going to be necessary to be able to ensure that the investments that we're making in the theoretical part, in the software part, in the model part, in the compute part of this artificial intelligence stack, what's missing? Well, they looked around and figured out power was missing. SoftBank is not just betting on the AI future. It's trying to finance the industrial base that makes the AI future physically possible. That's really important. That's the key part of this story. And that's what makes all of this an Asian story. Okay, let's take a bit of a break and let's welcome Yoke, Ling, Q to the show. We'll be right back. Can you hear me?
I can hear you. Can you hear me?
I can. Super duper. Okay, let's just jump right into this thing. How are you today?
I'm good. Yeah.
Okay, let's go. Give me a second. Okay, so let's welcome Yoke Ling Q to the show, Executive Director at KewMann. We wanted to have him on the show today because we want to talk more about artificial intelligence governance and how enterprises in highly regulated industries are approaching human-centric AI. But before we do that, let's get a little bit of context. Maybe you can tell people that don't know already what KewMann does, and then we'll jump into some of these topics. How does that sound?
Yeah. Thanks. Thanks, Michael, for your invitation.
It's my pleasure.
And for KewMann, we are a 12 years old human-centric AI company.
Yep.
And what we are focusing on is on delivering AI for highly regulated industry. For example, the government, the banks,
Yep.
the insurance, the healthcare, and the education. Yeah.
Okay, super duper. So let's just get right to this, right? How are you helping enterprises? And let's just talk about banking and insurance. And frankly, if you want to mention the government stuff as well, that's great. But how are they approaching AI governance as they adopt agentic systems? We spend so much time talking about agentic AI, but I always like to think like, and if you listen to one of the episodes that I did last week, you'll hear me talk about this a lot. And that is, you don't want to have a pilot flying a plane that hasn't like been through some kind of licensing, right? Like you want them to know how to do it. And part of the reason why is you don't want that plane to crash. And I think sometimes when we talk about governance around AI, people thinking, come on, why are we regulating this? Why does it matter? But in every other part of their life, they are doing the similar thing. Walk me through how this is working and how this is being approached in at least the banking and insurance sectors, if you don't mind.
Yeah, sure. Yeah. For the sectors in ASEAN at least, where we are operating in,
Yep.
Typically people are approaching it from three particular layers, right? So layer number one, I'll call it as model layer. And from the model layer perspective, the governance for model layer is not just about accuracy, but it's also the explainability, the fairness, and the ethical aspect of it. And that's where the first part of the model layer are being governed from the banks and as well as the insurance. The second layer, which is to me more important, and we can see the elevation and importance from first layer to second layer, and of course to the third layer later.
Yep.
From a second layer perspective, is really about the workflow and the process layer.
Yeah.
And when we talk about workflow and process layer, that's where I will emphasize a lot on human in the loop. What is the boundary of AI, right? Is AI able to draft but not approve? And if let's say everything is autonomous, what are the exceptions? How do we do exceptions handling by the human? Who is going to make decision finally? Who is going to approve it? So that aspect of human in the loop and the decision making from a human judgment perspective, is what I coin as a process.
Can I jump in here for a second if you don't mind? Because this is something, again, I've spent a lot of time thinking about too.
Yeah.
So today, let's just say, let's remove agentic AI, let's remove artificial intelligence from all of this just for now. If I'm running a division or if I'm running a department at any big company, and let's say I have 15 people working for me, at the end of the day, I'm responsible for the decisions that get made, the output that gets made, and the execution that happens within my department. Is that a fair thing to say? I think that's fair, right?
That's fair.
But
Absolutely fair.
But what kind of conversations are happening around agentic AI, particularly from a best practices standpoint, where now instead of having 15 employees, let's say I have 10 employees and I now have 5 agents running with me. Right. And they're still kind of working for me, but like, what's the governance around that in the sense of not who's liable? Because like stuff doesn't go wrong that often, although it can, but like who's responsible? Who do we think should be?
So maybe I'll just narrate through one of the examples that a recent example with a bank. The bank's chief credit officer is actually very visionary. His vision, of course, is not something that we as human beings wanted to be. He has more than 200 staff. He wanted 75% of them to be, in a way, replaced by agent.
Okay.
Right. So that's his charter, and of course, we are talking about how we are able to help them to process loan autonomously and so on and so forth. So while he has the vision, he has not have that thought on who is going to be ultimately responsible. So I advise him that, hey, ultimately, all the decisions that made has to be you, Mr. Chief Credit Officer, are the ones that are responsible for all the credit decisions that made by agents together with your staff, right? So ultimately, then is how do we design it so that it's actually a co-pilot situations where things that can be is pretty confirmed that let's say 95% of accuracy and situations that can be approved autonomously. Let's do it that way, right? Let's autonomously run every single process. However, those that are off, for example, I think in that case, about 13%, 1/3, right, is actually when the AI is unsure, it will then defer back to the core pilot, which in this case is its staff, to be able to continue the process. So that's what the kind of design of the process or redesign of the process works in the environment like this.
So I've seen, I mean, I always say this, right? But I've seen multiple tech cycles, excuse me. And during every one of these tech cycles, particularly when some kind of automation software has come in, and I used to work on a sales trading desk, right, for a portfolio trading business. And we kind of invented the algorithmic trading space in that arena. And it just meant that we could go from doing, like, let's say, $100 million of business every day to $1.2 billion. Like it was like 10 times more, 12 times more business. But our staff size never changed. And I think part of the reason why was because we just never wanted the algorithms to run on their own. And the credit example you gave is actually a good example because it's not that different, right? It's like we want to run some kind of credit analysis. The chief credit officer at the end of the day is going to have to approve it. The trading at the end of the day, I was going to have to approve, and I was going to have to talk to my client about, is the algo doing what you want it to do? And they wanted someone there to talk to. So I didn't lose my job because of the technology. I just had to do 10 times more work, if that makes sense. And I'm wondering if you see that type of mentality happening in these specific places as well, right? Because if at the end of the day, a credit decision is going to get made, that's going to have follow-on impact for, risk management and a whole bunch of, and profitability and other things too. Are people really going to lose staff, or that staff just going to do different stuff?
Right. From a formal communication standpoint, I think the banks that I talk about, will talk about redeployment of other stuff.
Yeah, for
Whether it
sure.
happens or not, of course, is beyond my jurisdiction.
Yeah, of course.
Now, the ones that stay on to continue to help the credit departments is essentially able to do more with
Much.
less. So, and ultimately, they can. Why we say they can do more is that a lot of decisions, for example, in the past, a lot of credit decisions are run by backbox, for example.
Yep.
Right now, it can explain, and in case the customers are calling in to complain why I couldn't get credits, it's all there, right? So they have, in fact, those information, if the bank wanted, can all channel back to the customers as well.
Yeah, fair enough.
So those are the benefits of actually running that. I would not say that. So in this case, if the bank portfolio of, in this case, loan is the same, and of course, in the agentic AI workflow, we are talking about how potentially to help them to upscale the loan portfolio. That will increase the size of the loan portfolio. But beyond that, the goal for them, obviously, I think is driven by operation cost pressure. That this CCO is actually looking at how AI can help him in achieving the goals that he's eventually wanting.
Can I ask you this as well? Just because your purview is so large, right? Are you seeing, and I don't need the names of banks or names of institutions. To be fair, I don't really care. It's more a philosophical question for me. Are you seeing different reactions from different institutions of the same size, where some of the institutions are embracing this at scale and thinking, if we don't do this, we're going to get left behind. But where some other institutions may be thinking, let's let the other guys do this first and figure out what the problems are, and then we'll jump in later and kind of do it. Like, are you seeing different approaches here?
Definitely. So bank of all size, and we have all size of maturity. Even bigger banks may have less, will be more careful and even less mature in some sense, right? So
Yeah.
it's all about personalities. If the person, let's say from a top or as a role of CCO or COO or chief compliance officer, is their own charter to say, oh, this is what I want to do.
Mhm.
I may want to pioneer it. There are a lot are actually, I wouldn't call it laggards, because in many ways, agentic AI is still very new,
Yeah,
right?
very.
So they are trying to experiment things together with us. In some sense, some of it are really small little part of their operations that they want to try out with agentic AI, rather than the whole piece of credit, the whole piece of compliance, for example.
Super interesting. You're right too. Like, we are still at the earliest stages of this, right? And I've talked about this a lot on the show too, where it's like, it feels like artificial intelligence and agentic AI has been around forever because we've spent so much time talking about it, particularly like in the last 6 months. But the reality is that this stuff is super duper new. Yeah.
That's right. Absolutely.
So when you're talking to your clients or even potential clients, what are some of the biggest challenges? Because we're not just deploying AI, we're deploying it in what's meant to be like a human-centric way. What are some of the biggest challenges you have seen or you've heard about or you're approaching here?
Right. So there are a number of it that I have seen. First is, I think, even for the person who championed this, for example, in the case I always refer to, the chief credit officer and also his lieutenant, right?
Yeah.
It's always about trust and explainability, right? So okay, you build something, we are together along the way. I see how the results are being come out, but still it will be in some sense replace the normal days, right? They are in the past they always talk to a human being and they can
Right.
explain. In this case, it's all about AI to explain to them and to find out things. So I think trust and explainability is always the first hurdle for anyone who then start to deal with agentic AI.
Got it.
The second part of it, I think, very important is who do what. Basically, I would call it as role and responsibility clarity. AI, to what extent and what boundary does this do? In certain sense, you can't let them to reverse engineer a decision, for example, or reverse the steps of the decision. And there are certain system that it shouldn't touch. So how do we then bridge the gaps? And where is human going to be sit? Are they making decisions? Are they helping out? And if AI fails, what are the mitigation plans? So those are the roles and responsibility aspect of it.
Yeah, so this trust thing is actually, I can never forget the thing my grandfather said to me about trust. It was more about reputation, but I think these two things are combined. And this is
Yes.
true. He actually did say this to me. It takes a lifetime to build a reputation. In this case, it takes a lifetime to build trust, right?
Yep.
But just a moment to lose it. And
Yep.
the implications, and this is one of the reasons why when we were building our algorithmic trading business at Goldman Sachs, we did so much testing, like so much testing, because one of the things we were afraid of was if we rolled out these sort of autonomous trading agents, essentially, and they not went rogue, but they just did things that we didn't understand and couldn't explain, right? Getting back to this
Yep.
idea that you were talking about, like this trust and explainability, because our clients would call us and say, why did it do that? If it didn't make any sense, we would have to
Absolutely.
understand why, right? Right?
Yep. That's
So,
right.
so one of the things we did was we tested it ourselves on our own book. And then the other thing we did was we tested it on some of our smallest but closest clients so that we could work out the kinks and the problems. And then we rolled it out to the biggest fund managers in the world. Do you see the same type of strategy happening internally now at the banks and insurers where they're like, if we want to make sure that the trust is maintained, right? Because again, the technology is still really new. How do
Yep.
we build that trust first internally or in a way that's contained internally, grow it out so that by the time we're using it, I'll say this metaphorically, but everywhere, that we don't run the risk of, that thing just blew up and now we can't use this forever kind of thing. Do you know what I mean?
Yep. Yep. Absolutely right. I think testing in the era of agentic AI is very important. There are many edge cases, a lot of edge
Yeah.
cases that we can't even think of. And in fact, when we do the test and we run all the possible edge cases as ourselves and also our closest customers that jointly co-create with us would run, but I think that would not solve all the problems because ultimately there will be situations that come up as is continue to run, and
Yep.
therefore. Uh, Again, I think go back to the role and responsibility. What are the boundaries of this particular AI is able to work that will safeguard the trust as well from an AI perspective to the human beings. For example, the team that we are going to work with. And I think very importantly, from a challenge standpoint, is cultural challenge.
Yeah, for sure.
Um, yeah, a lot of folks are doing the works for many years. I think much older than me, right? Now the
Probably.
issue is that yes, they're running it. They're running the same thing for like 20 years.
Yeah.
They know everything, right? And right now we are saying that hey, the workflow has to change. Some of your decisions are now relying on AI, but you can still do it. So the way that I think we would circumvent this particular situations is really um, AI is AI, agentic AI is agentic AI, and now how do we fit this into the customer's workflow? And that will be very important. And the other smaller customers that we have, interestingly, they still run by their credit decisions with the branch officer, with the branch manager, right? So
Yep.
in this case, we don't circumvent that. We are saying that okay, agentic AI doing all this nice thing, but one of the decision point is we route to the human. Human basically I don't. So far, based on what I know, is that they have no human, including the branch manager, has overruled it. Basically, they are in the loop to just say click yes, so
God.
that they are still remain in the loop. So I think that feeling is important.
Are you seeing generational differences? You mentioned like some guy or some gal has been doing this a role for 30 years. They're definitely much older than you are. But are you seeing a generational difference in the not just the acceptance, but in the ability to sort of test it out and make sure that this stuff works? Do you know what I mean? Because like I've always been an early adopter. It didn't matter if I was 20 years old or 200. It wouldn't matter if I was 200 years old. I'd still be like, oh, I want to test this thing out and make sure that it works. But for the most part, I would see some generational differences. Are you seeing the same thing as well?
Yes, I do believe that this actually is one of the potential issues to be addressed for people in different generations, especially in the older generations. They have been doing it for so long.
Yeah.
So in some cases, that is pre-agentic AI way. People fail a UAT, the user fail a user acceptance test, just because uh, they are used to doing keyboard, and right now we are asking this person to use mouse. The person for this person to fail the UAT is that hey, sorry, is much lower than when I use the keyboard.
Right.
So I think that's how things goes.
I love this. So again, I've seen so many of these technological changes, and to me, they're always so exciting and so interesting. And I feel like I get to learn something new every single time. Before I let you go, talk to me a little bit about risk management. Where is this headed as AI becomes more autonomous? And I know, again, we're still at the early stages, but like, where is it now? And where do you think risk management is going to go as we kind of get more comfortable with this technology?
Right. Um, I think before AI really goes in, and even with AI, less agent AI though, there are a lot of point decision, and is the risk management function is always about checklist. So sorry to say that there's a long list, and you have to take off things, and you have to perform certain tasks. And I don't think this is bad. I think this is a good habit. Now the checklist aspect, the manual aspect, and is slowly now replaced by more continuous aspect, right?
Yeah.
So rather than you doing a point in time job, right now, agent is running to 24/7, right? So it's always doing all the checkings. So that will let they will let the risk professionals to have I would say easier life in some way, right? And the second aspect that I've seen is that rather than doing it, and risk function most of the time is actually more of what had happened. You are dealing in the past,
Yeah.
right? Most
Yep.
of the time, most of the time. So right now, with agents, agentic AI, and stuff like that, that we can do things autonomously. One of the key changes, and people are exploring, I wouldn't say that they have deployed, is to have things to be more simulated. So rather than saying that, oh, what had happened, right now, what may happen in 1 week time, and right now, of course, we know that there's some conflict in Middle East. What may have happened to my portfolio in this case? So I think those are where from risk identification right now I have seen that with agentic AI we can slowly move on to proactive, continuously running risk simulation.
Right. So this risk simulation is actually really important. I want to ask you one more thing, if you don't mind.
Sure.
Because what might happen is actually very interesting, right? And you can do a whole bunch of sort of iterative processes to figure out like what might happen. But almost more importantly, it's like, what if this happens? Right? Because what might happen, you could just have a bunch of, 10 different things that might happen. But what if
Right.
this happens? Then what do we do to disintermediate that risk? Is going to be, I think, a big thing for risk management. And you're right. In the
Yep.
old days, it was more just like, what happened yesterday and how does that impact stuff? Whereas, what if this happens? What should our reaction be? And if that's also going to be an autonomous reaction, how do we control that and make sure that that's going to be okay as well? Yes?
Right. Yep. Absolutely right. So the next stage that I have seen some of our customers are experimenting this
Mm-hmm.
together is the next part. So in the old days, that's called prescriptive analytics.
Yep.
And somewhere this is actually prescriptive analytics. It's actually now that we detect some patterns, what are the path? Path A, this is the recommendation. And right now with agentic AI powered by large language model, that's where the recommendations are able to come up, even to the extent of what are the formats that is being needed, right?
Yeah.
So then in this case, the key decision maker can now use those and their own experience to then make a very informed decision, because it's all uh, informed decision and also being recommended by AI in this case.
Got it. Okay, man. This has been really, really useful and really helpful. I'm going to let you go now. Yoke, Ling, Q, thank you so much for coming and joining the show. I really appreciate it. Love to have you back on again soon.
Thanks. Thanks, Michael. See you.
Bye for now. Okay, that was Yoke, Ling, Q, again talking to us about how AI governance is happening with agentic systems, particularly in places where these are heavily regulated industries like banking, insurance, and even in the government. That's going to be it today for ATP Insights. Thank you again for joining us. Give us a thumbs up on the video, subscribe to the channel on YouTube, follow us on all of our socials on X, on Instagram, and on LinkedIn. And let us know in the comments or let us know an email, michael@asiatechpodcast.com. If there's anything you would like us to discuss, if you agree with what we say, if you disagree with what we say, we'd love to hear your feedback. My name is Michael Waits. Bye for now.